Yo, what's going on, guys? It's your boy JumboJandro back at it again with another video. Yeah, today we're reacting to the stock market just peaked by my boy Graham Stephan. I usually watch this guy a lot, so it's gonna be interesting to see. And of course, we got the fresh, so clean new head to no food today. You know what I'm saying? But the stock market just peaked apparently. Let's go.
It's Graham here, and if you said the stock market, you would be correct. Yep, it's that time of the
He
week we
said the
talk
stock
about
market
what's
was up.
going
Get
on,
it?
because even through political tension, surging new cases, rising unemployment, a falling US dollar, and the news mistaking the Upper Peninsula for Canada, the stock market is too busy making all
This
of
man
us
Graham
money to
always makes me
notice,
chuckle, bro.
leading many of us to wonder, what's going on? Is it sustainable? Is this a bubble? Did it just peak? Have I smashed the like button yet? After all,
Smash that like button, bro.
since the March 2020 lows, the S&P 500 is up 65%, the Nasdaq is up almost
Wait a
100%,
minute.
and Tesla is up almost 1,000%,
Wait a minute. Tesla
quickly
has gone
becoming
up a
the
lot.
fifth most valuable company in existence. And that
Oh,
in turn caused our almighty Elon Musk to become the richest person in the world. Of course, if you're
man said almighty Elon Musk, bro. I mean,
wondering how he feels about becoming the richest person in the world, he tweeted, "How strange. Well, back to work." So while Elon Musk is back
I
at work
like it.
trying to get the Cybertruck into production, we should talk about what's happening in the markets right now. Because there's a lot of new factors and policies to take into consideration that will have a direct impact on the stock market and your money. Plus, I'm sure
Baby.
there's a lot of skepticism about how far this stock market rally might go, or if this is just the euphoric craze before the US intelligence eventually has to share what they know about UFOs. So with that said, let's go over exactly what these changes are, what's happening in the stock market, the new policies about to go into effect, and then of
Let's hear
course
it.
how you could use all of this information to make money right after, of course, we get the like button to its all-time high by smashing it for the YouTube algorithm. That's right.
Smash that like button, bro. Smash it.
Right, just one smash of the like button sends instantaneous data to the almighty YouTube algorithm, which then processes that information
Okay,
and
buddy.
sends this video pop up on their home screen. Just do me a favor, hit the like button. It helps me out a
Dude,
lot,
did
and
he
I would
really
greatly
just go
appreciate it.
all
And with
that?
that said, let's start off the video here. First, let's talk about what's recently happened in the stock market and what's caused it to go up so much lately. Number one, I would say, is the lack of uncertainty. See, when it comes to the stock market, or really any investment out there, the one thing investors extremely dislike is uncertainty. Prior to the election, investors were uncertain of how new policies would affect the markets. They don't know how tax rates might change or how to base their future projections. And because of that, most analysts and most investors get a little bit more cautious and they choose to play it a little bit safer just in case things don't turn out as expected. However, once the results were in and a vaccine was for
Look at
just in
his
case
face,
things
bro.
don't turn
Yeah, I just realized my camera, yo. Okay.
out as expected. However, once the results were in and a vaccine was announced, optimism started to pour back in and prices continued on up. Now, from an
Facts.
investor standpoint, we now have more information to use, we know what to expect, and now with a little less uncertainty, investors can start making more money. The second, we have a unified Congress, which turned out to be a good thing for the stock market. See, back in November, there was the
Down
thought that a
politician
divided
politics like
Congress
that,
would
yo.
be better for the stock market, and that would give us the best of both worlds. That's because any new policies must first pass through the House, which has a Democratic majority. From there, they would go on to the Senate, which has
Bro, I learned this in history class, bro. I don't need to
because
know
higher
that.
corporate taxes or other less business-friendly policies would be unlikely to pass through the Senate. We would have equal communication between both sides, and that would mean, for
True.
the most part, we would have more of the same, which for investors reassures them that no big, sudden policy changes would go into effect. But then we
True.
had the Georgia Senate runoff, which determines who controls the Senate. The election was held on January 5th, and after a really close race, it was determined that the Democrats would hold the majority in the House, Senate, and presidency. But guess what? Even though this was vastly different than the expectation that we would have a divided Congress, just because investors had a clear outcome and knew what to expect, the markets rallied yet again. Because now there's the prospect of a much bigger stimulus package and other incentives that never would have been the case otherwise. And that now leads us to the third reason why stocks have been going up so much lately, and that would be stimulus. There's a lot of proposals out there about a new stimulus package and increased government spending, which could have an extremely large impact on what happens with the markets and your money. For example, it's estimated that green energy might become the next big tech, with billions of dollars of funding going towards electric and hydrogen vehicles, solar, and a multitude of other eco-friendly options. This is why stocks like Enphase, Plug, Blink, Ride, and Tesla
You ever you need some
eco-friendly
stocks? I got
options.
you.
This is why stocks like
These are the ones you
Enphase,
should invest in, boys. Enphase,
Plug,
Plug,
Blink,
Blink, bro. You know I'm the Plug. Ride. I'm a ride. I'm a ride for you. I'm a dude. Holy cannoli, bro. Look at this. Jeez. From $10 to 25.
Ride, and Tesla just skyrocket,
We got
alongside a
Tesla on
multitude of
hand.
other brick-and-mortar restaurant stocks which are expected to benefit from additional stimulus.
Yo,
Not to
cheesesteak
mention
factory,
the
bro.
M stocks that I'm not sure I can mention here on YouTube, but Willie Nelson, Snoop Dogg, Elon Musk, and Seth Rogen kind of come to mind here. Anyway, those are expected to do well
What?
too, with a lot of legalization opening up for them. This is really
Oh, I get it now.
paving the way for a big surge of interest into companies like this. And I wouldn't be surprised if this continues, albeit just expect a bumpy ride. That's why, between those three factors, the stock market has continued to surge higher and higher, recently passing an all-time high. But that then leads the question, have we seen a peak, or how much higher can this go? Well, to answer that, let's first look back in history to see where we might be going, and let's start off with the Senate and how that impacts the stock market. Because the results to this might not be what you would expect. Since 1950, the average annual stock market return was 17.2% under a split Congress, 13.4% when Republicans held both chambers, and 10.7% when Democrats had control. Although even though those numbers might seem like quite the difference, it's a lot more balanced when you take into consideration who the president is during that time. In our situation right now, we have a unified Democratic Congress. They've maintained that position for 22 years, and during that time, the S&P 500 has averaged a 9.8% return. That's only slightly lower than the split Congress alternative, which averaged a 13.6% return. But that only held true for 4 years, and it's not accurate to say that every year would be as great as those 4.
I like Graham. I like
Not to
Graham,
mention,
bro.
over the
I like
last 70 years, the market has only posted a year-over-year loss 4 times under this current unified government. So really, as you could see, no matter what happens or who's in control, most likely the market is going to react positively. Like, if we had a divided Congress, then sure, we're unlikely to see a higher stimulus package. But we would be unlikely to have higher corporate taxes, and for the most part, everything would stay the same, and that would be good for the stock market. But if we have a unified Congress, then sure, corporate taxes might go up. But we're also likely to see a much bigger stimulus package, which is also good for the markets. So really, either way, no matter whose side you're on, as long as we have an outcome to base our projections on, the market is just going to continue doing its thing, which as of now has just been going up. And finally,
basically just chase the bag, bro. Just chase the bag.
before I go into my own thoughts on this, we gotta put this to rest, because quite a few people have been comparing the current stock market today with that of the 2001 dot-com bubble, and that's something we gotta talk about. Now, for those not
I don't know what that is. Give me the bug, bro.
aware, the dot-com bubble was a stock market bubble in the late 1990s where tech and internet stocks were seen as the future and trading at some pretty wild valuations. Nearly any company with .com in the name would be worth millions of dollars.
Yo. First of all, who names their company Pets.com, bro? That is the worst name I've ever heard of in my life. And how do they raise $15 million? Whew, it's a
Dollars
crazy world we
despite
live in.
never having posted a profit. But people bought them anyway because they kept going up in price and everyone was making all this money. That euphoria lasted a few years until all of those tech stocks collapsed 90 to 99%. Many companies also went bankrupt, and some, like Cisco, just never recovered to where they used to trade at 20 years ago. So let's talk about what's going
That looks worse than my dad's hairline, bro.
Cisco just never recovered to where they used to trade at 20 years ago. So let's talk about what's going on, and I'll link to this article down below in the description to give credit to the author. First, the dot-com bubble went up significantly faster than what we're seeing today. Like during that 5-year run-up from 1995 to 2000, the NASDAQ increased 456%. Compare that to the last 5 years today, and the NASDAQ is only up 127%.
Look at that
The
huge
second,
dip,
we
bro.
can also look at the price increases of the best performing stocks during that same time period. In the dot-com bubble, Cisco went up almost 4,000%, Microsoft was up
4,000%, bro.
1,600%, Oracle was up 1,200%, and Intel was up 1,000%. Compare that with what's happening today over the last 5 years. Amazon is up 511%, Netflix is up 368%, Apple is up
Yeah, it's kind of cool to see Netflix still going up, even though like they've gotten so much competition, bro. Like Disney Plus, Hulu, HBO, bro, and they still going up. I like it. I like it, bro.
183%, and Facebook is up 176%. That's pretty much only a tenth of what happened back in 2000. The third, because of those insane valuations 20 years ago, the PE ratio of the NASDAQ was 175 near the peak of the bubble. Now we're at a PE ratio of about 25. That's
I don't know
because
what that
tech
means.
companies today are actually making a decent amount of money, and that's bolstering up their stock price. Now fourth, interest rates are also significantly lower today than they were back in the dot-com era, leaving people with very few places to invest their money other than the stock market. Like back in the dot-com era, treasuries were still paying a risk-free 6%. And if investors had the choice to risk their money in tech stocks or get a guaranteed 6% return on their money, that 6% return started looking better and better as tech stocks started going higher and higher.
Bro, I'm taking that
Today,
6%. I'm taking that 6% any day. Any day of the week, bro. If I get 6% a year,
that doesn't necessarily exist, and because of that, more money has entered the stock market. And fifth, increased stimulus combined with increased savings combined with an influx of retail investors through apps like Robinhood and Webull, where if you deposit $100 using the link down below in the description, they're going to be giving you 4 free stocks that are worth potentially up to $1,600. So if you want that
that's a great deal, bro. Keep it a buck.
offer before it expires, use the link down below in the description and let me know which 4 free stocks
I don't have a link though, so don't check my description.
you get, because it's pretty much like free money. Anyway, that's caused a lot more money to pour into the markets, whereas otherwise it would just be spent. Now this is not to say that everything is still undervalued and stocks are going to continually go up. Like people could argue that the EV market right now is a little wild when you look at stocks like Nikola, NIO, and Tesla, which is
Yo, what'd you just say?
that the EV market right now is a little wild when you look at stocks like Nikola.
Whoa. He did not just say what I just.
Go up. Like people could argue that the EV market right now is a little wild when you look at stocks like Nikola, NIO, and Tesla, which have already gone to the moon. But with the Federal Reserve doing everything they can to keep the economy running, investors have gotten used to having this sort of backstop should things get too bad. And there's certainly the mindset that more money could just be introduced into the economy, and because of that, we'll just be okay. So what does this all mean for you? Well, even though the stock market has so far peaked at its previous all-time high, according to history, that does not mean it can't continue climbing even higher. And when we compare ourselves to the 2001 dot-com bubble, we're still pretty reasonably priced. It's really important to understand this because the more we know about the markets, the more comfortable we feel to invest. And the less likely we are to panic when the market drops 1% and we post to Reddit asking if this is the big crash that everyone has been waiting for and if the market's soon about to collapse again. The point I'm
Yo, this man's editor, top tier, bro. Top tier.
trying to make with this video is this. You could always find reasons to believe whatever you think the stock market is going to do. If you think it's overvalued, there are certainly indicators that you could find that would make that true. Or if you think it's undervalued, then I'm sure there are other indicators that you could find that would prove that correct. It's
All up to perspective, yo. Oh my gosh. All up to perspective. You can use that anywhere.
just like the thinking that higher corporate taxes will lower stock prices, but another stimulus would raise stock prices. Either way, the market is what it is, and stocks over time tend to go up. So sure, maybe we could see prices coming down, but we're also just as likely to see prices continuing to go up in the short term, especially in the areas that are beginning to see a lot of attention, like green energy. But if I have any piece of advice for you to hear, it's just this. Just keep a 3 to 6 month emergency fund at all times, and then keep investing consistently. I realize realize it could be difficult plowing money into the S&P 500 when it was at its all-time high, or worrying that maybe it's all downhill from here. But over the long term, the price you'll end up paying is not going to make that big of a difference. But at the very least, the more you know about the markets and how they work and how the policies affect them, the more you realize
Do your research, guys. Do your research.
that none of it matters, and the more comfortable you feel investing long term. And that's the entire point of the video, alongside with trying to get you guys to smash that like button for the YouTube algorithm.
Smash it.
So with that said, you guys, thank you so much for watching. I really appreciate it. As always, make sure to destroy the subscribe button and the
Will do, Graham.
notification bell. Also, feel free to add me on Instagram. I post it pretty much daily, so if you want to be a part of it there, feel free to add me there. As my second channel, The Graham Stephan Show, I post there every single day. I'm not posting here, so if you want to see a brand new video from me every single day, make sure to add yourself to that. And lastly, if you guys want those 4 free stocks, use the link down below in the description, and Webull is going to be giving you 4 free stocks when you deposit $100 on the platform, with those stocks potentially worth all the way up to $1,600.
Yeah, he's just plugging here at the end. So yeah, I'll stop it there. You know what I'm saying, guys? That was pretty interesting video. Now I ain't no stock analyst out here, but it was a cool video. You know what I'm saying? I guess you know what they say. 2021 is our year. I guess, bro. We going up and up and up. I was thinking of investing into some stocks, bro. And if you guys would like me to make a video on that, I mean, I'm down. I'm down to make a video on that. You know what I'm saying? Especially because I am pretty young, but yeah, you already know the vibes. Bada bing, bada boom. Make sure to like, subscribe. And your boy. Oh, also watch out for Omegle Part 2 this week. I don't know. I don't know if I'll be able to get it by Friday, but definitely this weekend. Right, anyway, yep. Boy, JumboJandro is out of here. Oh my chicken, bro.
Yo.